Global share markets ended last week higher, but across the week they did see some fairly substantial falls. Of course, the key concern over the next couple of days will be the fallout of the massive earthquake that has now hit Japan. Investors will be concerned and will be looking to the reinsurers to see what potential effects they will see out of this in the short term. Japan is a big contributor to the global economy, and at this moment they contribute up to 9% of global GDP. It would also have an effect on us here in New Zealand, given that Japan is our fourth largest export partner and does take up around 30% of our kiwi fruit exports. This could be a concern to us, as New Zealand is a key export partner for Japan and other Asian areas. The New Zealand dollar has strengthened somewhat over the past few days despite the turmoil around the world. On Monday morning, we do start the week trading at 74.30 against the US dollar. Other agricultural commodities have also been impacted by the potential effects of the Japanese earthquake. Last week and over the past few days, we've seen significant drops in grain prices, particularly coming out of the US. This is a result of the potential that we will see a drop in demand out of the Japanese economy. The Japanese are the biggest importer of US corn and the second biggest importer of both wheat and rice. Last week, we did see wheat prices drop by 14% in the US market, and this was a result of the earthquake, as well as the recent estimates by the US Department of Agriculture. The USDA have suggested that the big supplies and the potential drops that we've been seeing over the past few months may not be quite as bad as previously thought. This will have an effect on the US livestock sector and will be a dynamic that we will be watching fairly closely over coming months. New Zealand beef schedule prices have increased again over the past week, and this is a direct result of two positive effects that have emerged recently. The first positive comes from the New Zealand dollar, which has dropped a few cents against the US. This will be a benefit to beef exporters, although we have seen some increases over the past day or two. The other positive is an increase in imported beef prices in the US market, and this doesn't look like it's going to change anytime soon. New Zealand beef producers will be benefiting from this, and I suspect that they will continue to benefit from this over the next few years. In the US market, cow numbers are well down and calf numbers have also reduced over the past 12 months, indicating that that market will be tight over the next 2 to 3 years. This is a dynamic that we in New Zealand should benefit from over the medium term.